Hello, I'm Laura Richman, and I'm counsel in Mayor Brown's capital market practice, and I'm based in Chicago. And I want to welcome you to our micro talk on COVID-related non-GAAP financial measures. Towards the end of March of last year, the SEC's Division of Corporation Finance issued disclosure guidance topic number 9, and that provided some key takeaways for non-GAAP financial measures relating to COVID-19. And a key point that was emphasized is that in the COVID-19 context, non-GAAP financial measures should only be used for the purpose of sharing with investors how management and the board are analyzing the impact of COVID-19 on the company. They shouldn't be used for the purpose of presenting a more favorable or rosy picture. You need to explain why the measure is being presented, why it's useful to management, how it helps investors understand the impact. And you should also remember non-GAAP basics, such as don't give more prominence to the non-GAAP financial measure than the most directly comparable GAAP financial measure, which should appear first. And according to the guidance, if the GAAP financial measures are not available at the time an earnings release is being made because the COVID-19 related impacts require additional time or additional information, additional analysis to complete, the division wouldn't object to seeing a reconciliation to non-GAAP of the non-GAAP financial measure to preliminary GAAP results. That could either include a provisional amount based on a reasonable estimate or a range of reasonably estimable GAAP results. But if you're talking about an SEC filing such as a 10K or a 10Q, that has to be GAAP. So you would not be able to reconcile to anything other than the GAAP results in that context. And if you are reconciling to a provisional or estimated range, for example, in an earnings release, you can only include the non-GAAP financial measure that's being used to report financial results to the board of directors. And you should be explaining to the extent practicable why the line item or accounting is not complete at that time, what additional information or analysis may be needed. Now, to determine if a COVID adjustment is appropriate for a particular company, you're going to have to assess the facts and circumstances to consider what specific adjustments should be made and how the adjustments should be presented and explained. In a year into the COVID experience, you're also going to have to consider whether an expense that was originally anticipated to be non-recurring has actually become an ongoing operational expense. So even if you provided non-GAAP financial measures for COVID over the course of the past year, you may need to revisit them to think about how the business may have changed in the course of the pandemic. There are a number of points that you should be considering when you're developing the COVID-19 adjusted non-GAAP financial measure. First of all, is it appropriate to describe the particular adjustment you have in mind as attributable to COVID? And do you have a basis for presenting the adjustment as an actual amount as opposed to a hypothetical example? Can you quantify the adjustment? And is it incremental to normal operations? Also, you should be considering whether the COVID non-GAAP adjustments give the full picture of the situation, because it's possible you might need additional disclosures in the MD&A or in a business section to provide the full context. And in terms of the presentation, be consistent between periods when presenting COVID-related adjustments. Explain what the adjustment is and exactly what is being adjusted to reflect COVID-19, and what is management's objective in presenting the COVID adjustment. Why is it useful to consider? And think about whether your disclosure controls and procedures are sufficient to cover your COVID-related adjustments or if they need to be expanded in any way. If sanitizing or disinfecting or PPE costs have been included in prior COVID-related non-GAAP adjustments, you really need to consider whether in the new normal, some or all of those costs are becoming ongoing so that they're no longer appropriate to deduct. So some other types of examples of COVID-related non-GAAP measures include special bonuses or pay raises, such as hazard pay or a hero bonus. On the flip side, there might be cost savings if you've laid off or had unpaid furlough. Some companies have had COVID-19 related restructuring charges. Others have had lease or contractual termination costs because of the pandemic, or maybe there were facility shutdowns. But the point is to be specific. COVID-19 has touched so many aspects of business that it's not enough to simply say a COVID adjustment when you're preparing a non-GAAP financial measure. And there have been some SEC comment letters that are specifically addressing COVID-19 non-GAAP financial measures. And it's useful to keep those in mind when you're preparing your own. So for example, some of those comments ask companies to provide further detail on the excluded expenses and whether or not the adjustment was reasonably quantified and what portion of a quarter was affected by the adjustment, to what portion of the quarter did that adjustment apply. These adjustments should be incremental to the charges incurred prior to COVID-19 and reflect a situation that is separable from normal operations. So there is definitely a place for non-GAAP financial measures that reflect the impact of the COVID-19 pandemic, but they must be carefully considered and presented and used properly. I hope this talk has been helpful in highlighting the key issues. For more information, please visit our free writings and perspective blogs. Thank you for listening.